So 2023 marks exactly 20 years of Novare's Mayibentsha Moderate Qualified Fund of hedge funds operating as a qualified investor fund. When you're starting anything new, enabling relationships may be key to your success, as well as the longevity that you may enjoy. Today, I'm joined by David Fraser, Executive Chairman at Peregrine Capital, speaking to us about their relationship with Novare Investments and them coming on as fund manager 20 years ago when the Mayibentsha Moderate Fund began. David, thank you so much for your time today. I do believe that it is a year of birthdays, Peregrine Capital turning 25, and the Novare Investments Mayibentsha Moderate Qualified Fund of hedge funds turning 20.
Yes, great. No, thanks for having us here. But I think those are both very significant timelines. And I think certainly when you get into investments, you want to think long term. I think 20 and 25 years is exactly the sort of time frame where we feel very excited about and looking back on those 20 or 25 years for very nice, consistent performance over the longer term. I think that's what real investment is about. It's about building real wealth over the longer term.
David, Peregrine was the first hedge fund in South Africa back in 1998. What were some of your thoughts when Novare Investments approached you to become the first hedge fund manager for the Mayibentsha Moderate Qualified Fund of hedge fund?
Well, I think back in those days, hedge funds were a very new concept, certainly for the institutional market in South Africa. And I think that certainly it was somewhat brave, I think, for a lot of institutional money to start looking at hedge funds. I think unfortunately, hedge funds had a particularly difficult rap. I think that people understood them to be high risk with a high potential of blowouts, whereas in fact, our suite of hedge funds were relatively low risk. And certainly we enjoyed dealing with the guys there because they certainly understood the advantages that hedge funds would have on a portfolio over the longer term. I think they understood the lower volatility, the lack of correlation. So I think certainly in those days, it was very exciting for us to have another institutional client. And I think the first investment was 27 million Rand, which certainly in those days was a very significant number in our lives. And we were very excited. I think it was a very professional engagement. We saw that they understood our products. They did a pretty extensive due diligence. And I think it was a very significant milestone in this business's evolution. I think our own business is having its 25th anniversary today. So again, 20 and 25 are both very significant numbers. And I think significantly in the hedge fund industry, the survivalship bias is potentially low. So for us both to be around this long, I think does speak to the longevity of the product and of the relationship.
Let's talk about the relationship and the longevity and success of it, David. What has been, the secret to ensuring that Novare Investments and Peregrine Capital are able to maintain the relationship?
I think understanding each other's businesses and understanding what is expected from the product. I mean, I'd like to look back in our 25 years of existence and say we didn't have any bad times, but I'd be lying. We had 2 or 3 pretty tough times over that period. But I think the ability to sit down with a experienced and knowledgeable client and understand perhaps what went wrong in a 6-month or 9-month period, explain to them honestly that perhaps mistakes were made or things were missed, I think is a great advantage. I think we long to have clients who have a longer term aspect or view on things. And I think those are exactly the sort of clients that we like in our fund, who are prepared to perhaps ride a little bit of short-term volatility here and there and are prepared to sort of invest for the longer term. And I think over 20 years or 25 years, I think that the numbers speak for themselves of a long-term, stable track record, which is, I think, exactly what the product offered to its clients.
So let's talk about some of the challenges that hedge funds still experience and might have experienced back then, David, that could still be a factor today.
Yeah, well, I think right in the beginning, as I said earlier, I think that hedge funds had a particularly bad press. People didn't really understand what they could do. And it was such a generic term that, hedge funds could range from particularly high-risk products that had a high blow-up risk to actually what our funds are significantly lower volatility and lower risk than perhaps a normal equity market product. So I think the understanding of hedge funds is something that's come a long way in that period. And I think the market is really starting to mature now and understand exactly what hedge funds are and exactly what value they can add to a portfolio structure. And I think particularly for clients, they want to know what it says in the box, and they want to know that it delivers what it says in the box. And I think significantly, I think in hedge funds, they get that over the longer term, which is obviously very pleasing.
I assume the South African hedge fund environment has evolved over time. So talk to us about what it might have been like in 1998 versus what it's like today.
Well, I think when we first started, I think that, again, our seed capital was provided by Peregrine Holdings, which had just listed. So they gave us our seed capital. And then we had a few sort of friends and family who invested in a lot of high net worth individuals, and took a year or two to start looking at that institutional market. And clearly over time, with our track record, and I think also with relationships, I think people back people rather than necessarily a business or a concept. I think we proved ourselves to be a product that was worthy of inclusion in sort of clients' portfolios. And I think over time, the hedge funds have built their track record and built their name to a situation right now where they certainly investors understand that they do have a sustainable place in any portfolio. And certainly from our perspective, we think hedge funds are absolutely almost essential in investment portfolios. I think if we look at how things have evolved, I think clearly regulation was a very big factor in I guess, legitimizing hedge funds, which happened probably 5 or 6 years ago. The regulation, the registration of all of us, as well as the inclusion under the CIS structures. So I think what we have had is a maturing of that situation. And to be frank, right after regulation, we felt that we'd had a lot of regulation, but very little benefit. But I think over time, we're starting to see the value of that coming through now, and we are starting to see real traction in hedge funds over the sort of medium term with a number of different portfolios and number of different clients. So I think we've almost had an evolution from the beginning days of the perception of being cowboys to these days where we are in a highly regulated market. And I think certainly we are becoming more and more mainline and less niche. I mean, I think that if you look at the market share of hedge funds in the investment portfolio world at the moment, it still is almost minuscule. It's sort of, just over probably 1% of the total savings industry in South Africa. So we still think that hedge funds are a great place to grow, and we still look forward to hedge funds taking a slightly bigger share of that sort of 99% that we don't have any interest at the moment. And I think over time people will warm to hedge funds. And as I said before, I think investors want a product that delivers what it says in the box. And I think over time we've proved that is kind of what we do. So we look forward to hedge funds becoming an even bigger part of people's portfolios going forward.
Well, thank you so much, David, for your time today.
Pleasure.